Think about your entire investment future. Now imagine putting 100% of that money into one single company. If that company hits, man, you're rich. But if it fails, you've lost everything. We all know the old saying, don't put all your eggs in one basket. In the world of finance, that basket is your investment portfolio, and the eggs are your money. Hey there, my name is Anthony, and welcome to Growing Your Wealth. First off, I'm a sinner redeemed by Christ. I'm a husband, father, student ministry volunteer, shout out church family if you're watching, photographer and videographer by trade, and a stock market enthusiast. The reason I'm making this channel is to bring glory to God while helping others become good stewards of the money they have. Today, we're talking about diversification, the single most important tool you have for managing risk and achieving stable, long-term growth. Stick around because I'll break it down in what it is, how it protects you, and the simple steps to diversify your portfolio today. All right, as the GOAT of investing always says, diversification is protection against ignorance. It makes little sense if you know what you're doing. Okay, I know, hear me out. I know it sounds so contradictory to say this, but I'm going to assume you're new to the market, and diversifying will mitigate major downside risks starting out. I'm diversified as well, just in different ways. Okay, so what does diversification really mean? Well, diversification is simply spreading your investment dollars across a variety of different assets. It's not just about owning 10 stocks instead of one. It's about owning different types of asset that react differently to the same economic event. The whole point is to mitigate unsystematic risk. That risk is tied to a specific company or industry. The diversified portfolio smooths out the rough edges. When one investment is having a bad year, say the energy sector, and another one like tech or healthcare might be having a great year, it kind of smooths it out and blends it and keeps things flat. This leads to the key concept of correlation. We're going to want assets that are uncorrelated or even negatively correlated. When assets move in opposite directions, the losses in one area are offset by the gains in the other, keeping your overall portfolio relatively stable. Diversification isn't about maximizing your returns, it's about optimizing your risk. You give up a tiny bit of potential upside to avoid that catastrophic downside. Let's look at the three main layers of diversification that you should apply to your portfolio. While this may be a strategy, remember there are always determining factors for individual investors. All right, here we go. Layer 1, diversify within stocks. Don't just buy technology stocks, spread your money across different economic sectors like healthcare, real estate, and consumer goods. Economic factors affect these stocks very differently. Also, diversify geographically. While the US market is a powerhouse, global markets offer growth opportunities and can act as a hedge if the US economy slows down. I wouldn't personally do this is just me, if I was starting out, but these are options to explore. All right, layer 2, diversifies across asset classes. This is the big one. An essential portfolio includes more than just stocks. It should include bonds, which are historically less volatile than stocks, and sometimes cash or cash equivalents. When the stock market is crashing, bonds often hold their value or even rise, providing crucial stability. Your personal mix of stocks and bonds will depend entirely on your age and risk tolerance. If you're younger, you might be 80% stocks. If you're near retirement, you might be closer to 50% stocks. Who knows? Everybody is different. All right, check this out. Layer 3. We want to diversify through investment vehicles. The easiest way to achieve incredible diversification instantly is through index funds or exchange traded funds. These are ETFs. Let's say you buy the VOO, Vanguard's 500 S&P 500 index. You are instantly invested in 500 of the largest US companies. That's built-in diversification. It's easy and effective. I do want you to be mindful though. This is a safe, effective way to be diversified, but you're not going to get the large returns as if you were invested into a specific stock. There's no right or wrong way to be invested. Just know when you index or sector buy, your investment is basically spread out over all of the companies in that sector. Diversification is part of adopting the correct investor mindset. It forces you to think long-term and to accept that you don't need to and you shouldn't bet the farm on a single winner. So what are your takeaways? All right, check this. First, look into the index fund or the ETFs as the foundation of your portfolio. While this isn't technically a must-do, it is a great starting position. Second, look into balancing your asset allocation with bonds to manage market volatility. The return is less, but so is the risk. And third, don't forget to rebalance once a year to maintain your intended risk level. While this is good for index investing or bonds, individual stocks should be monitored on a quarterly basis. Listen to those earnings calls and read those income reports. So check this, I really enjoy the game of baseball. So I'm going to use an analogy here. The goal isn't to hit a home run every day. The goal is to consistently get on base year after year so the power of compounding can truly work its magic. Diversification is the fence that keeps you safe while you run the bases. I love baseball. Ecclesiastes 11:2 says, invest in 7 ventures. Yes, in 8. You do not know what disaster may come upon the land. I love this verse as it points to not putting all your eggs in that one basket. If you made it this far in the video, awesome. I'm glad you stayed. If you're invested in the market, let me know your current asset allocation in the comments below. If you found this video helpful, hit that like button and subscribe for more foundational financial content. Until the next video, happy investing and may God truly bless each and every one of you.